the rampant sell-off in the markets globally. Rupee depreciated to today its record lows of 74.4 against the dollar. Let's discuss what could be the move going forward for the currency. We have Mr. K. Harihar of First Rand Bank who's joining us on the phone line. Mr. Harihar, record lows for the currency. Where from here? We've seen that RBI is taking steps to make sure that there is forex liquidity. What's your take on the currency right now?
Surely the rupee is under pressure, and I don't think there's going to be any immediate respite from that. I think the biggest pressure for the rupee is coming in from the fact that the FPIs have been selling in a very, very big way in this month. More than 30,000 crores across debt and equity has been sold, and obviously is leaving the country. So that is a very, very short-term pressure that's coming on the rupee. Offsetting that will be, of course, the fact that there are going to be huge savings coming in from lower crude prices, which could probably annualize even to as high as $50 billion. But that saving comes over the next, months and a year. So that will come in, and therefore the current account deficit, which earlier people are anticipating will be 1.5%, people are now forecasting to be below 0.5%, even probably 0.25% for the last quarter. So fundamentally, I think we are in an okay space, as in whatever you're going to lose on the FPI, you will make on the crude savings. But on the shorter term, sentiment is against you, FPIs are against you, and the overseas EM currencies are getting battered. So what is called popularly the NDF price. So if you look at those overseas traded prices which are there, they're very, very illiquid and very thinly traded, but that give you an indication of where the markets think they should go. So there we are seeing the rupee being a 1 month rupee at about 75 rupees. So it gives you the trend where it's going. So where do I see the rupee? I think the rupee will trade with a weak bias, will probably go to that 74, 75 region. But as I mentioned, clearly the huge savings on crude imports and the fact that the other big import item, which is gold, has become so expensive that we expect gold imports to come down substantially, I think will mean that if you're an exporter, you should look to be selling your export receivables and at that 74.50 and 74.75 level, and locking in also to the forward premiums.